Yesterday's price is not today's price.
Imaginary players aiming coach right. Master recipes under stove lights. The number on this jersey is the quote price. You order Diet Coke, that's a joke, right? Everybody get it off the boat, right? But only I can really have a snow fight. Detroit nigga challenge, what's your dope like? If your bin's bigger, step it up to ghost life. Missy, was I only misdemeanor? My tunnel vision's better under stove lights. You order Diet Coke, that's a joke, right? My workers compensated so they don't strike. Wish me luck, see green like Don Bishop. The ones you trust don't change like them chains you tuck. Far as I'm concerned, who's the best? Me and Jesus. Washed and dried, so give me all of mine and pesos. Add it up. Your bitches in them pictures, but they laser tagging us. They mad at us. Who wouldn't be? Everything your mama said you shouldn't be. The Porsche's horses.
All right, guys, welcome back. So this teaching is going to be for the more advanced students that already understand how to read a chart, what a candlestick is, things like that. So before we get into this, what is inefficiency and how do we use it? So there's two different types of inefficiencies. There's a fair value gap and a volume imbalance. And we'll dive into both of these in a little bit, more detail. But the previous episode, basically every market either moves to liquidity or inefficiency. And that is how the market books price. Right? So every time we're going to explain these concepts, we have to think about a market book and who is operating within the book. So what is an inefficiency? And we're going to start with the fair value gap. So a fair value gap can come in the form of buy-side imbalance, sell-side inefficiency, or sell-side imbalance, buy-side inefficiency. All right, so what does this look like and what does it actually mean? So when there's a buy-side imbalance, it means that the algorithm is delivering price for buyers. What does it look like? So every time there's an imbalance where they're only offering buy-side order flow, it's going to create gaps in the market. Now, how do we determine what the gap is? The gap is represented by a single candle that only offers buy-side delivery. So what do I mean by that? Let's just zoom back here and pretend like this is the first bar, right? We can actually go into a bar replay. Right, so this creates the first bar. We're going to skip forward one bar. Now we have another bullish candle. One more bar. Now we have an inefficiency. What do I mean by that? This candle only offered buy-side delivery. It needs to offer sell-side to fill it in. Now, if we're thinking about an order book, right? There are orders in here for buyers and sellers. But when the market is pushing higher very quickly, some of these sell-side orders are not being filled because they are not offering price at that certain level, right? If the market moves very quickly, it's just going to print up here, and a lot of orders are going to not be filled. Like they won't offer people to sell at these prices. So what does the market need to do to rebalance the book, right? If we move away very quickly, there's going to be orders that pile up in here because price hasn't efficiently traded between 107.50. What is the high of this? 107.56 and this low, which is 108.08. So within that 107.50 level and the 108, we need to redeliver sell side delivery before it's allowed to go higher, right? This is a discount level. If the market runs away from here, smart money's not trying to buy into this move. They're trying to wait for a pullback. So where do we find the pullback and how do we read it as order flow, right? So when I'm trying to trade, I don't trade based off of what happened in the past, right? Trend lines and indicators and even like historical price levels, they don't really give you a great indication of where to enter and exit a trade. Like we need precision, right? And precision comes from reading current order flow. I don't really care what happened last week. I want to know what's going to happen next. And where can I get a good fill, right? So if I'm bullish and let's say we're trying to target this high, right? This is a level of liquidity that I'm trying to target, right? Now we have the next candle. This is engineering liquidity above the high. What does this do? Now it's offering sell side delivery below that level, which is the inefficiency, right? Once this is tagged, now smart money can start accumulating within this inefficiency, which is a discount. So the algorithm is going back there to reprice and offer sell side delivery so that smart money can buy it from them, right? So let's keep going forward. Look at the response after it's filling in pretty much what the price we had mentioned, right? The high is 107.560. What is this low? 107.588. If you're trying to operate as smart money, this is where you need to be operating. Smart money understands when this runs away, I'm trying to buy it at a discount, right? So even when it runs away, smart money is setting a buy limit order down here, right? So when price is trading up here, they're just going to set a buy limit order down here. They get filled. Wouldn't you want to be in the market down here, right? Let's say you don't expect it to run below. Let's say if you enter the long here, right? That's where your buy limit was. And you're not expecting it to break this lowest candle, right? This is much more favorable risk to reward, right? 5.5 to 1. If I'm going to risk 1, I'm going to make 5.5, right? Let's say if you didn't understand this inefficiency, right? And you're waiting for some type of trend line, which doesn't exist. There's no trend line here, right? Let's say if you're trying to get in the market up here now and aim for this high, what does your risk reward look like? Well, you have to put your stop at a logical level, right? It's all the way down here, and you're only gonna make what you're making. You're not even making 1-to-1, right? So like you have to understand. This is part of understanding inefficiency or liquidity. This is 80 to 90% of my trades, and this will make you a millionaire if you understand it. What is the order book? What is the algorithm doing to fulfill and facilitate trade at certain price levels? Right? It's not off of trend lines. It's filling in orders and then taking the other direction. Like put yourself on a pit floor when people weren't even using charts. Right? My mentor says he doesn't need a chart to trade profitably. All he needs to understand is time and price. If he understands that there's an imbalance in the market, we're trying to fill our orders with inside an imbalance or at a level of liquidity. And this is providing our risk reward ratio. So just, I'm going to take off the replay mode and we're going to find inefficiencies in the market, right? So let's delete these. right? So we're going to find buy side inefficiency or sell side inefficiencies, right? So this is another example. Same thing. We have one up candle, right? That's one print. This high and this low creates the imbalance. What does it do? Price comes back and pretty much fills in the whole inefficiency, and then it runs higher. And in bullish environments, we are going to see sell side imbalances be violated. So this is how I know I'm on the right side of the marketplace. It's all about narrative. Let's say if I think it might be a short-term top here and it just blows through this level, well, now I have to change my narrative. There's no reason if I'm bearish for it to just plow through this sell side inefficiency and run this high. Right now, the market structure is shifting, and now we're starting to see higher highs and higher lows. Well, I'm trying to find a level, right, where I can buy on a retracement, not a trend line, right? You could possibly draw a trend line here, right? But if you're waiting for it to come back and touch the trend line, it's never going to do that because it's just filling in this inefficiency before going higher. And that's part of just getting on the right side of order flow. Just set a buy limit within this inefficiency, understand that it's already at a discount, and then you're trying to target higher, right? I mean, it takes a long time because smart money's accumulating within inside this inefficiency, right? They're going in, they're taking liquidity, they're generating interest because they think they want to trap people to get them to go short on the market when they're trading into a buy side inefficiency. And then it runs higher. Right? Here's a really good example inside of here. And I'm going to annotate this chart with actual prices. So on TradingView, if you hover over, you're going to see the price. So this candle is Friday, June 3rd, 2022. The high is 102.225, right? So this is the high. I'm going to just put it here, 102.225. I'm going to draw an arrow so you guys know what I'm looking at. This next candle creates a buy side inefficiency, right? It doesn't matter that the market traded down here, like it's sucking in orders for people to go short, and then it's rallying and it's creating a buy side inefficiency. This next candle, what does it do? It breaks market structure to the upside, making it bullish, right? It doesn't matter that it closes down on the day. It created a higher high and a higher low compared to yesterday. What is the low on this candle? 102.260. Right? What is the difference between these two candles? It's about 0.04. It's very small. This is algorithmic, right? What does the next candle do? It doesn't fill it in. Thursday, which is likely a reversal day, this might have been CPI or some other print. What is it actually doing? It's coming back inside of the buy side imbalance. It's offering sell side. And who is selling into this? Retail is selling into this because it opened up, it traded down. Retail is probably thinking, oh, this market's going to go lower. When smart money understands that the market structure has shifted bullishly and they're buying inside of this they're buying inside it. You don't want to wait for the candle to print, right? When the market is trading down here and your bid line and your ask line is trading within this price, you go long. It doesn't matter what the candlestick looks like or whatever trend line you're looking at. I'm just buying it based off of price and time. That's it. I'm not looking for anything else. I'm looking for a time window, maybe an economic news release to come out. If price is trading within a certain inefficiency, I'm going to place my order within it. Does that make sense? So when we're in a bullish environment, we will consistently create buy side imbalances and sell side inefficiencies. And when it's in a bearish environment, we are going to create sell side imbalances and buy side inefficiencies. Right. And I'm going to say that these are either BISI or SIBI, right? Like if we were to go back here, where's my text? Right? Buy side imbalance, sell side inefficiency is a BISI. And sell side imbalance, buy side inefficiency is a SIBI. Now, let's just go through. And when we have a fair value gap that gets violated, this suddenly becomes a balanced price range. Why does it become a balanced price range? Well, they've offered buy side and sell side. They've offered sell side here and then buy side here. So if price were to come back in here and trade, it would become a level of support and resistance. And then we have to play within that. What does the market do after it hits those levels? We can find a possible balanced price range in here. Like if we were to extend this, right? This is the buy side imbalance. They offered sell side here before it rejected, right? If you're trying to go long, you're just trying to buy it inside the buy side imbalance at a discount. If we were to extend this rectangle, once the market structure changes here on this candle, look at the closes, look at the bodies of the candle. So every broker is going to have possibly different wicks. They cannot manipulate the body of the candle. Whatever the closing price is, this is the time aspect, right? Within this candle, different brokers and exchanges can possibly push price higher or lower. So wicks are not as important as the bodies of the candle. If I were to remove these wicks right here, right? Look at the body of the candle. It's respecting that inefficiency level. Throw it back on. If we're to zoom in, this becomes a balanced price range for efficiently trading lower. So let's go back through and find some more examples of buy side imbalances. Same thing here, right? When the market's trading up here, it's leaving all these inefficiencies in the marketplace. So when the market's trading higher and higher and higher, I do not like to see this. When the market's trading higher, right? Creating inefficiency, inefficiency, inefficiency. It doesn't come back. It's only filling this one in, right? But this is a great setup. Look how perfect this is. This is not a buy. This is not, buyers and sellers imbalance in the market. The market is being delivered by an algorithm. This is the algorithm. What is this? The price of this candle's high. 102.363. What is the low of this candle? 102.352. You're basically within a cent of that inefficiency being filled in. What if you were to set your buy limit here? Right? You're not waiting for price to show you that it's buying, that there's buyers and the order flow is bullish. You're not waiting for that. I am trying to get my order filled at the most inefficient level where they're going to reprice and redeliver sell side. Because somebody's getting trapped on this end of the trade, trying to go short, and I'm going to buy and get long. I don't need to see a huge run, right? This risk reward is fucking amazing. Let's say you weren't even going to get in at the right price. It doesn't matter. You can get in towards the top end of this inefficiency. You might take a loss here, right? You might buy it as soon as this candle comes in. All right, well, I'm going to buy it the next day. Guess what? That one loss is being made back 7 times over. Or 3 times over, 5 times over. It doesn't matter. I can get out anywhere up here, and it's a good risk reward trade. right? So let's keep going back through and find some more examples. These are volume imbalances. We're not going to get into that yet. Let's see. I had a really good one that I wanted to show you. Oh, this is the one. Here we go. Here we go. If you didn't think that this market is ran by an algorithm, you are not on the right side of the market. You're not really fully understanding what drives the market and what is creating order flow, right? What is the high of this candle? 104.606. And this is why I don't like using trend lines, because these prices are not subjective. If I were to tell you to look at this candle on this day, June 28th, we are all going to get the same price, right? If I say, oh, I'm looking at this trend line on the dollar, does that make it a good learning environment or understanding of the marketplace? No. It's so ambiguous. There's so much ambiguity in trying to plot a trend line and say, "Oh, this is the perfect rejection level. Let me get in here." What is the low of this candle? 104.645. So within this price, right? Like, let's look at some basic math. It's 4 cents. Right? It's a 4-cent inefficiency. What is the low of this candle? 104.636. Right? What is this? Doesn't this price fall within those two prices? Or sorry, do I have the right prices here? What high is this? 606? Yeah, I do. Sorry. This is the higher price, right? It looks weird because, well, you know what I mean. Right? This price falls within these two prices. That is your smart money algorithmic theory buying the market. If you're bottom ticking this, you are the algorithm. This is algorithmic, right? It doesn't come down here and then people just get all emotional and they say, "Oh, yeah, it looks like a buy down here because this candle looks bearish as shit." Who is buying in that, right? Who's bottom ticking this? A computer. So we can also use these inefficiencies to target price, right? I'm going to remove some of these items. And this is kind of what my premise is behind why I'm still bullish on the S&P. And we're going to flip over to S&P and we're going to go through some examples as well, right? So I was following this inefficiency for quite some time. This was back in September. This might have been CPI, something of the sort, some news driver. But when this printed, I was expecting for it to come back, fill it in, and then I can get long for this run. But it didn't, right? And within these days, I was still buying long. Didn't really care because this candle rebalanced and then traded higher. And within this area, right, is a buy side imbalance, sell side inefficiency. As an intraday trader, I don't really care what the market's going to do in 2 weeks. I just want to know what's going to happen tomorrow. This day looks extremely bearish, right? Tuesday. And what did I say on the last video, right? On a weekly candle, right? Let's say the week opens on Monday, start of a new month also, right? We're looking for some type of manipulation. And it's trading into an inefficiency. It doesn't matter that the day closed extremely bearish. I'm still trying to go long the next day. Otherwise, I'd be looking for a sell side inefficiency. But because the market is predominantly bullish, I'm trying to go long on Monday, Tuesday, or Wednesday, right? For a weekly close on Friday, right? Like if we were looking at the weekly open versus where it closed, right? It closed up here. It doesn't matter that it trades lower, right? On a weekly basis, I'm trying to buy below the open of the weekly candle if bullish and sell above the open if bearish. So when the market's trading up here and up here, it's when we get this rejection, right? We get a level of liquidity that gets ran out and then trades lower, right? Then we get a market structure break. This is a break in market structure. Why? Because it's creating lower lows and lower highs compared to these highs, right? High, low, lower high, lower low. As soon as that happens, now I'm going to expect that they're possibly going to target this inefficiency. So when price trades up here into a premium level, right? Like if we're going to drop a Fibonacci, this is a premium. We want to buy in discount and sell in premium. So when the market's up here, we are going to try and find some reason to get short. It might be an inefficiency on a lower time frame. It might just be an order block, right? So I haven't touched on order blocks, but basically smart money sells during up candles and they buy in down candles when it's bullish. So with this in mind, right, the market structure is bearish. It's trading at a premium. We've created a lower low and there's an inefficiency below us. Well, on every consecutive candle, I'm trying to go short to fill in this inefficiency, and that's my target. And if it is really bearish, right, it's going to target these lows, these relative equal lows, because there's liquidity here that was never taken, right? This is the order book. There's orders being built up below this level because they haven't ran it out, right? So every time the market traded higher, 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 more and more orders and liquidity is being built up below this low, right? So going bearish, you're just trying to find a sell side imbalance, buy side inefficiency, right? So same concept when bearish. The low of this candle and the high of this candle within that creates imbalance. Smart money is selling inside of this inefficiency, right? We don't know where the top is going to be, but if it's rejecting this on a lower time frame, this is on a daily, so if we're intraday trading, there possibly is a setup in here where you possibly see a push lower and then a retracement before it drops, targeting that inefficiency, right? You're looking for, I don't know, 160 point move off of that. So not only do we have fair value gaps, which is buy side imbalance, sell side inefficiency, we also have volume imbalances. So I'm going to type that again. So we have BISSIes, we have SIBIs, and we have volume imbalances. Now, these are easy to spot. What is a volume imbalance? A volume imbalance is basically a gap in price where we have one candle's close Thursday, right? This is not really a crazy overlap here. Thursday at 5 p.m., or I think 7 p.m. on the dollar, is when the candle closes. And the next day it opens, right? I think it opens at 9 or 8 p.m., which is only 1 or 2 hours later. And it creates a gap. Do you see this? Between the close and the open. It closed here, opened here. That creates a volume imbalance. And what does price do every time it touches that? Well, smart money accumulates within that, right? They're generating liquidity. They don't take this high, right? So what does this mean? If they don't take the high here, they don't take the high here, They don't take the high here. It's generating more and more buy side liquidity. So if I want to be a buyer and I'm operating in here inside of this volume imbalance, I'm buying. Where's my target? Here, right? This is my draw on liquidity. Because if I'm bullish, the volume imbalance should not be disrespected. This level should not be disrespected on a closing basis. What do I mean by closing basis? I mean, it comes down here, right? This closes, and then the next candle comes down here and closes. Because what does that mean? It means that the sell side order flow is being delivered, not buy side. Because if it comes down here, comes back up here and tests that level, right? I'm trying to get a brush here. If it comes down here, comes back up, rejects that level, now I'm bearish and trying to find an inefficiency to target, because the market is either going to target liquidity or inefficiency. I don't get that setup, so I'm bullish, right? With the premise in mind that this volume imbalance should not be rejected. There's another one here, right? On a closing basis, look how perfect the bodies of these candles respect that volume imbalance. They close within inside of it. It never breaks below it, right? This sucks because if you were buying it, and let's say you didn't expect this day to come all the way down here, you're going to take a loss, right? Well, the next day you can recoup that loss. So it's important not to overtrade, right? Because as soon as this day closes, now you have validation that they are respecting this volume imbalance. The next day, I'm just going to try and go long again below the open, right? If you're operating below the daily open, right, within here, and within here, you are smart money. You are on the right side of order flow. And within inside the wick provides you the best risk reward ratio. If you're operating with inside the body as it's trading above the open, you're not getting as great a return as somebody that's operating with inside the wick. So let's try and find some more volume imbalances. I believe there's some over here. Yep, we have one here. Oh no, sorry, that's a SIBI. Here's another one, right? We have a close and the open creates a volume imbalance. This is inefficient price action. The market is coming up here, making it efficient by offering that price again before going lower. Same thing here, right? This is a volume imbalance. It's closing, opening, repricing, then lower. Now there's, a plethora of examples. This is going to be part of your homework, is to go through and find buy-side imbalances, sell-side inefficiencies, sell-side imbalance, buy-side inefficiencies, and volume imbalances. So I'm going to go over to the micro E-mini S&P. So we're going to just look for sell-side imbalances and buy-side inefficiencies. Right? Look how perfect that is. Look at the bodies of the candle. Respecting an inefficiency and then trading lower. You need to be operating as a seller inside an inefficient level. When they offer buy side, you sell into the buy side. That is how you become a profitable trader with high accuracy. Right? Here's another one. Now, what is the narrative that this is doing? This is a range bound market, so it's likely to run buy stops and sell stops. So we have different models to trade within a, bearish environment and bullish environment. We're going to take losses, obviously. But what does the market do on this retracement? Right? The market sells off, creates sell-side imbalance. What does it do? It's running out this low. Now what? It retraces to this low. As soon as it's touching this level, right, they're going to generate liquidity and send it lower. But what is that doing? It's still leaving this level above it. Right? It hasn't fully made the market efficient. It's provided a great trading opportunity, right, to sell short in a premium. If you were to draw a Fibonacci level, this is your premium, your discount. It's trading back up to a premium to go short, but it is not filling in this inefficient price action. So this is still inefficient. What does this do? These double tops. It generates liquidity. This is engineered liquidity. If it were efficient, you would have seen it poke above higher and then go lower. That's efficient. Because it's flushing people out of the market, it's inducing buyers, and then it's turning around. Well, what does the market do again? It runs out the stops above this high, fills in another inefficient level before selling off. And when you're trading within a range, we're just looking to take profit at old lows, right? So both of these setups, even though this got stopped out eventually, if you were short, you would have tried to been out down here below this old low, right? So if I'm short here, I'm out here. When it runs back up here, there's another level that we could have played as a buy-side inefficiency, right? We have a swing high, an impulse swing that breaks market structure, intraday, right? Or not intraday, intra-week. It returns to a discount level or a buy-side inefficiency, sell-side imbalance to target this inefficiency that's still back here, right? So we have multiple setups inside of this framework that we can go short, long, short, long. This is profitable trading, and this is mastery. I'm missing moves in here too. You're not going to be perfect, but there's a narrative that you have to follow. The narrative is now we're rebalancing buy side, and then we're rebalancing sell side. Right? So we have multiple opportunities within this framework to trade these inefficient levels. And that's giving us the high risk reward setups. So those entries are called institutional order flow entry drills. So institutionally, they're filling their orders up here. I'm not top ticking these markets. I would be surprised if you could too, right? But institutions use computer algorithms to trade inefficient pricing, right? Majority of them they don't have traders like you and me at our computer desk trying to fucking trade these levels. They're placing billions of dollars worth of orders within premium and discount levels. So when markets return to inefficient prices, we have to understand the narrative when it's doing that. Is the market bullish, right? We had a strong breakout to the upside, right? After it's taken liquidity. This is the narrative. If the market were bearish, it would not reject the low like it did here and then create a buy side imbalance. So that is a change in the state of delivery in the algorithm. We are now bullish, right? If you were expecting to be bearish here, right, you might have made some money here. You might have made some money here. You might have made some money here going short. Now the narrative is changing intra-week to go long. The market is coming back in here, pricing sell side, and then it's rejecting higher, right? And within that narrative, they're coming in and creating liquidity, right? There's a low here, they run it out, and it rejects. Look how perfect the retest is. It's trading back into that inefficient level and then going higher, right? This is the S&P again. So what am I looking at on the S&P and why am I expecting it to go higher, right? Well, I sent my weekly analysis, right? Let's remove some of these drawings. I don't want to see any of this. If the market were bearish, we would want to see SIBIs be respected, wouldn't we? That gives me clue that the market is still bearish when it's sell side imbalance being respected. This is violated. So why am I not bearish? Because I've already been invalidated going higher. So if the market is either targeting liquidity or inefficiency, it's already shown me that the inefficiency is favoring the buy side. Okay? So why am I now bullish? Right? This is a balanced price range. They offer sell side imbalance. They reprice it. Now it's buy side. Right? Look at the candles down here, respecting the discount level of this inefficiency. If it were bearish still, it should not violate this. So it's offered sell side, and now it's offered buy side. And what has it done? In my perspective, it's really only come back into a discount to go higher. Right? Liquidity or inefficiency. We have the high here. It's generated engineered liquidity above this high because it hasn't ran it out yet. And what sits above those highs, right? What are we looking at? Do I even have to call it out? Hopefully your eyes can pick it up. A volume imbalance. And an inefficiency. So not only has it done this, balanced price range, sell side imbalance violated, liquidity's been engineered, sell side imbalance, and volume imbalance above it. On top of media narrative saying we're in a deep recession, the market is going to top, it's going to go lower. Right? They're generating the narrative for you. You're falling into the trap of retail. This is the narrative. What is price doing? If the market were bearish, they would be offering buy side to then go lower. Well, it offered buy side here and it blew through it. Makes no sense if you're bearish. Okay. Now let's see if we can go into some other markets, right? Let's see if I'm in an Ethereum trade right now. these inefficiencies are everywhere. They're on a 1 hour time frame, they're on a daily time frame, they're on a weekly time frame, they're on a 5-minute time frame. Yes, a 5-minute time frame, a 1-minute time frame. So this is the algorithm. So let's go into a 1-minute chart. And let's just see if we can find a buy side imbalance, sell side inefficiency. This is how the market delivers price on a 1-minute time frame. And this is how you become a master in the craft. We're not trading trend lines, we're trading price and inefficiency. Why is it creating buy side, retesting that, and then rejecting? Buy side offered sell side higher. Buy side offered sell side higher. Right? Sell side inefficiency being rejected. That's an invalidation. The market is still trading higher. And you don't have to be. So the thing with when you're trading a 1-minute chart, you have to be extremely active, right? Because if you're placing your trade, let's say like this, right? This is the same setup I would take on a daily. Just imagine if this were a daily chart. This is the same setup I would take on a daily. What would I target? Some level of inefficiency above the market, right? What would I target in here? This inefficiency or this inefficiency? Right? So this is giving you, right, a 6-point stop loss to make 22. Now with spread and everything, it gets a little dicey. Just because, when you're trading the lower time frames, it's moving very quickly. But this signature is in every market. The buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency, and volume imbalances. So this becomes a balanced price range. Let's say if you didn't see that inefficiency down here, you see this one. You could play this one. Same thing. Sell side's being violated. If you were bearish, it should not do this. It should not look like this on a 1-minute time frame. Look how fucking perfect it is. You can't make it up. This is not these traders are not in here doing this. This is a computer doing this. It's repricing to that high and then going higher. Because in a 1 minute, this might happen in half a second. Boom, gone. So let's see if we can find some more examples. Right? Buy side imbalance, sell side inefficiency. Volume imbalance. Look at the candle bodies. Right? We have the close, the open. Boom, 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 boom. This is the close, this is the open, this is the close, this is the open. Have any of those prices violated even halfway into this volume imbalance? That, sir, is how a market works. On a 1-minute basis. Right? We can do this on a weekly, we could do this on a monthly, we could do this on a yearly, whatever. Let's flip over to Bitcoin. And let's look at the yearly. Is it the yearly? I guess that's a bad example. Why were we, most of everybody who became a profitable trader or was a profitable trader trading crypto last year, on a yearly basis, what should the market do? Right? It should trade higher off the open before going lower, right? So this is the yearly open, traded higher before it goes lower. And if I were to do the market replay, let's just do this, right? This is back in 2021. Skip forward. Skip forward. Oh, sorry, skip forward. Oh, that's not right. Here we go. Can I just skip forward one bar? All right. So we have the high being swept. That's your liquidity. And the inefficiency, right? This is a quarterly chart. This is the same principle, same exact thing that's happening on a 1-minute chart or a 30-second chart or a 15-minute chart or a 1-hour chart. It's the narrative and how the market is booking price, right? I'm always referring to the higher time frames, but I'm using the lower time frame to get in sync with order flow, right? So we have the liquidity that's being ran out and this inefficient level that's down here. Some of you in here, I was calling this back in 2020 and saying like, oh, this run up to 60,000 is probably not going to last. I'll try and go back and find those text messages because at the time it looks fucking crazy. When you're saying, when the market's trading at $62,000 and you're saying it's going to come back to $25,000, you look like a maniac. People are saying, oh, it's never going to go back down there. It's going straight to 100. Well, this is inefficient. Extremely inefficient. Buy side. If you were around in 2020, this is only buy side. Boom. Buy side, buy side, buy side. Nobody's selling this market. All of retail, everybody's and their mother's buying Bitcoin. They need to re-offer that price level to allow people to sell inside of this. The algorithm's going to sell inside of it, and it's going to flush out everybody that's still long up here. Right? We're going to skip forward, skip forward, skip forward. Let's see if I can do this a little faster. I mean, what are you doing when it's up here and it's down $15,000? Right? What are we aiming for? A buy side imbalance. Every time it's trading back up into this candle body, more and more people are selling into that, or at least smart money is selling into that. Some people are thinking, "Oh, I'm gonna buy it. That looks like a bottom. Buy the fucking dip. This trend line should hold." Right? Buy the dip. Buy the trend line. When there's an inefficient level of price action down here, you're getting smoked here. Right? Trend line theory says, "Oh, let's wait for the retest." No, man. I'm shorting it to get inside this buy side inefficiency. I'm looking on a lower time frame. Where can I go short? 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 And to be honest, there's not really a whole lot in here. Like they're leaving inefficient price action, which possibly they could trade to in the future. You have to be like an intraday trader in here to make money. I didn't trade Bitcoin last year. Right? But it's running out liquidity here. It's generating liquidity here. Right? When this spikes down, people are saying, "Oh, this is the bottom. This is the Pico bottom. 25K, and you'll never see it again." Right? They're taking buy side liquidity and then pricing it lower, deeper into the inefficiency. So this is kind of why I don't really trade long term, just because there's so much more opportunity in a lower time frame. Right? I'm going to take losses. That's just part of the game. But within that framework, right, there's opportunity in here. Right? This is a daily chart. There's buy side inefficiency to price and reprice some of this. Right? They're not repricing all of this. Now, it gets a little more hairy when we think about what is inside of this inefficiency. Well, there's additional levels inside the inefficiency. There's a premium and discount inside of the inefficiency. right? If there's a major inefficiency like this and it doesn't get all the way up in here, well, what are we looking for? We're looking for the 50% or consequent encroachment of the inefficiency. And within side of that, there's more narrative, right? We have these highs being run out. And that is a swing failure pattern, right? So short inside of this sell side imbalance to go lower, right? This is a great trade. If you were in this trade, you're banking. Let's say you got anywhere in here with a stop up here. That's a great trade. When it reprices there, it's just slamming lower. It's not even giving you a retracement, right? There's no trend line that forms in here for me to go short. Where's the trend line? I don't see one. And when you're looking at this live, you're probably looking at it like, oh, this is a channel. And I'm gonna short the retest. Well, maybe there is no retest really. Like maybe it's here, I don't know. But the narrative for me is this inefficiency. Right? Like if you're looking for a lower high to be made, where is it being made? I don't know. Maybe this is it, but that's super sketchy. That's why there's no subjectivity in inefficiency. If I tell you, look at the inefficiency from Monday the 13th, everybody in this chat is going to have the same price, right? Everybody should see this level and this level. There's no ambiguity. I'm not going to confuse you, right? Everybody should have the same price. It's trading into that level to go lower. Right? What is this? Another sell side imbalance, buy side inefficiency. Right? If the market's bearish, it should still respect sell side imbalance. You don't want to see it punch through that and then come back down and then go higher. Right? It should respect this level. Now, if we draw the Fibonacci, right? Well, it's kind of close. I mean, the 50% level is somewhat respected inside here before it goes lower. But the narrative is there's a pool of liquidity that was built up here. They take the stops and then it goes lower. Right? You're not looking for a crazy move. If you're short there, you're just trying to exit at the lows. Short somewhere in here, exit at the lows. Right? Let's go forward in time. Again, a sell side imbalance. Buy side inefficiency. What is the market doing? What is the narrative? What is the narrative when I'm looking at this? Sell side offering buy side, right? Short term run on stops and then go lower. This is how you can become very proficient at reading the market and understanding where the market's going. Right? Let's say, if I'm trading market price down here and I'm expecting it to go lower, right? I don't want to see this get broken. There's no trend line in here where I'm placing my stop loss. I'm placing my stop loss based on efficiency, algorithmic theory, and expecting that this level should not be broken. That's all it is. And you take a loss there, but it's the same premise over and over and over again, right? So when I take a loss, I'm not afraid of taking losses. I'll take that loss every single day. But what is the narrative, right? So recently, what is the narrative? If I take that loss, what is the narrative? What was the market aiming for? There's a lesson to be learned here. Take the loss and understand what is the market reaching for. What is the market reaching for? It's reaching to reprice and rebalance inefficiency. It's either going to go to liquidity or inefficiency. So we're seeing a huge run right now, right? Which is why I'm bullish in indexes, right? I had mentioned, if you check the chat, I had mentioned earlier today that I want to see 40-30. Where are we trading at? 40-33. It's not a coincidence, all right? What am I looking at? I'm looking at a balanced price range right now on the daily. I'm okay taking the losses, right? I'm going to keep doing the same thing over and over and over again. Balanced price range. Why, if I'm bearish, would it trade through this? Why would it do that? The market is currently offering buy side. It is not offering sell side. So if we go back to Bitcoin, right? If it's going to go for here, what is it going to start targeting? It's going to start targeting liquidity, right? We're above the highs now. I would not buy. Instead, I'm looking for some type of pullback. Perhaps it does just keep running higher. I don't know. That is part of the game. Part of the game is understanding risk, understanding where there's inefficiency, and placing a trade. Right? So between this high and this low of this candle is an inefficiency. We could possibly target there. I don't know. We'll see. And what I had mentioned before, right? That same sell side imbalance, buy side inefficiency, has not been fully filled in yet. So if this market is going to be bullish, we're going to start targeting the highs, right? Like this is your trend line, your retail trend line, wherever this is. Who knows? I don't know. It's so sloppy, right? Where do I put the trend line? You got no idea, right? The market is targeting horizontal price levels. What is the price? What are we doing? Where is it going to go next? Old highs, old lows. Inefficiencies. There's inefficiency up here that hasn't been filled. Some people I'm following are calling for 25K on Bitcoin. And these people are not small traders. These guys are risking hundreds of thousands of dollars per position. So if I'm bullish, I'm just trying to find an area to enter long. I might have to wait a couple days. Right? And I don't know which one they're going to fill. I'm using the economic calendar to find time. Time is the most important aspect of your trade, right? It's not price. The market is using the economic calendar to reprice quickly and then drive it in certain directions. Okay? So I hope you found this video insightful. If you have any questions, just let me know. Hopefully I can dive deeper into this concept in the future. Take care.